Welcome back to Morning Kappa 88. Okay, so for the S&P 500, well, last Friday, uh, it slipped less than 0.1% as investors returned from the Christmas break to a lack of major economic data, resulting to a low volume consolidation or sideways movement on last Friday. So I think while the broader market was quiet, there's this stocks, which is a company target, rose somewhere around 3% after the news that the activist investors, which is Tom's Capital, had taken a stake. Also, um, over the weekend, Zelensky and also Trump met in the effort of to end the 4-year war, right? So yeah, we'll see the development going on, and also from this news, it has resulted to a weakness in the energy sector and the WTI crude futures as well, right? So I think for this week, expect the trading to remain thin and choppy throughout the this week, um, and also watch for the window dressing flows to potential uh, lift the index slightly as funds mark up the portfolio before the year end, right? So for now, we see that the 50 points still remains the strong cap for the S&P 500, right? Okay, so for the WTI crude oil price futures, well, I wouldn't say crash, but rather just a slight pullback right here uh, towards the support of $55 level to close at 56.91 cent last Friday, as traders price in a potential end of the Ukraine war, like what I mentioned just now, right? So President Zelensky and also Trump meeting last Sunday, yesterday, to finalize the peace work, remove uh, the war risk premium sentiment. So the bearish mode was also strengthened or amplified by the report reiterating that the massive surplus for 2026, which also overshadowed the supportive news of the uh, uh, US seizing another Venezuelan tanker in the Caribbean Ocean. Um, Also, for the oil price, right? So expect a volatile trading session today amid the ongoing outcome. Uh, for the peace talk meeting, and if any peace deals is announced, the oil price could flush lower to its 55 or even $53 dollar support level, right? So yeah, coming back to the Malaysia market, right? So the KLCI pause on last Friday, slipping at 1677.1 points as the 5-day winning streak snapped due to the profit taking in some of the counters like Maybank declining 0.76%. The big names like IHH as well, right? Slipping by 0.92 percent amidst lower, ultra thin post-holiday volume. So, however, I think the technology sector remain resilient with MPI surging higher and also Inari holding firm, tracking the global tech rally, while the Tenaga, if you can see here, continue to attract the INSEE support for the year-end window dressing. So I expect the index to drift uh, higher, right, towards the 1680 points in the final 3-day uh, trading session of the 2025 as window dressing that intensifies. However, um, keep an eye at the plantation stocks or the sector, as well as severe flood in some of the states in Malaysia over the weekend could dampen the sentiment as well, right? Also, when the market was a bit quiet, I think can see that the plantation sector is a top mover, only inching up by the 0.25% last Friday, right? So also looking at our watch list, so if we were to look at some of the highlighted sector names that's still moving in bullish, so maybe we can take a look at Tenaga, TM, McLean, Fitech, and E, and some of the names that we have highlighted, right? So I think before we move to trading stocks, right? Since we touch or talk about Tenaga just now, so maybe one thing to highlight is that I mean for Tenaga is that don't forget that the structure for Tenaga is now in the midst of reversal or switching to bullish after the stock climbing higher past the previous high. Also, if you can recall, we published this stock recently in our group. So we still keep our resistance at 1420 together with 1470, and now support is at 1360 followed by 1310 support level. Right. For our Malaysia trading stocks, so today we have SD Gatri, right? So the stock has breakout above this 565 cent level on a strong volume. And with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at 5 ringgit 90 cent, followed by 6 ringgit 15 cent. And also, if the stock to clear below this 5 ringgit 40 cent support, this could shift to a bearish structure. And next, we have CBH Engineering or CBHB. So the stock also experiencing a breakout at 46 cent level. So if the stock to remain bullish, we're expecting that the price to reach this 51 cent in the coming session with a high volume as well. And second resistance is at 56 cent level. So keep an eye at the 41 cent level for any attempt of reversal, right? And for the FCPO, well, on last session, it rallied to 4089 ringgit as traders aggressively bid up for the monsoon premium ahead of the weekend. So I think this is also fearing that the severe flooding in Terengganu, Pahang, right, would disrupt the harvesting and also the transportation flow, right? So sentiment was also further boosted by the pale oil, which trading higher, while the export data continue to support the narrative that the demand is recovering just as supply tightness. So I think at this juncture, we still hold a negative trading bias until it cross our stop loss at for 180 level, right? So let's take a look together today with whether the price could breach above this immediate resistance of 4100 level, right? So yeah, I'll stop here. Thanks everyone, and happy trading. I pass the floor to Eddie. Thanks.
Hi, thanks, Aiman. Today we have a initiation coverage report on UUE Holdings. We are initiating coverage with a buy, 71 cents target price. This is based on a 17 times FY27F PE, which is on an undiluted basis for its warrants, representing 28% upside. So UUE Holdings operates in one of the least visible yet indispensable layer of the Malaysia's power ecosystem, mainly operating in the medium voltage segment, which is the 11 and 33 kilovolt underground utilities. We believe that UUE is well positioned to ride on TNB's and SP Power Assets capex upcycle, cementing its place as a horizontal directional drilling underground utilities play. In terms of Malaysia's operations, UAE currently has all-time high order book that is supported by TNB's capex upcycle. Approximately 66% of UAE's outstanding order book, which is also at all-time high, which is 522 million, is tied to TNB contracts related projects. directly anchoring earnings visibility to Malaysia's power grid capex upcycle. Under RP4, TNB's allowed capex has actually doubled to 42.8 billion, driven by rising electricity demand. We do believe that contract availability remains deep, with demand that is stable, recurring, and highly visible. Estimating UAE's economical relevant portion of RP4 contract flows to reach around 10.6 billion or 3.5 billion worth of contract per annum across 2025 to 2027. For the upkeep of the distribution network. Furthermore, just a bit on how TNB contract works. So TNB contracts that UAE has in their books, these are usually area-based framework contracts covering multiple projects within a defined fixed area rather than a specific job for a single asset. And typically this contract, each of the contracts is awarded based on a 2-year tenure, together with an option for a 1-year extension, therefore a 2+1 structure. The contract specifies a total contract sum of which UAE may draw down as work are being instructed across various projects in that area. And importantly, once the initial contract sum is fully utilized within the first 2 years, TNB typically exercise an extension option that awards the additional contract sum of a similar value for the extension period. So in practical terms, if UAE has a 20 million contract, it could translate into a 40 million worth of cumulative work over the 2+1 year period, provided that the job is completed timely. And so with this structure, it actually enhances revenue visibility and repeatability, as the contract extension are driven by execution capacity rather than retendering risk. That's one upside there. In terms of Singapore, also similar story. SP Power Assets capex reached a new high of 1.16 billion Sing dollar in FY25. Early stage tender activities have actually picked up, including front-end planning works, which typically precede HDD contract awards by several quarters. And as project activity normalizes and UAE's track record deepens, it has actually begun to secure meaningfully larger projects, evidenced by its recent 20.9 million Sing dollar contract win. This actually signals both larger project scope and stronger integration into main contractors' planning stage. Currently, all 10 of UAE's on-the-ground team in Singapore are being deployed. And in terms of earnings projection, we are projecting a 3-year earnings CAGR of 30.6% for UAE, largely driven by progressive billings of its all-time high outstanding order book. Moving forward, we expect order book replenishment of 350 million per annum for FY27 and 28. This is to be supplemented by its recent fleet expansion to facilitate the anticipated growth in underground utilities engineering operations in both Malaysia and Singapore. So our target PE of 17 times actually represents a 10% premium to peers, justified by its superior earnings profile, unique contracting arrangement with EPCC contractors, as well as attractive valuation on a growth-adjusted basis. And that said, our 71 cents target price exclude potential dilution from the warrants. It will be 62 cents if fully diluted. And that actually includes a 4% ESG discount based on a 2.8 ESG score. To sum it up, downside risk to this, failure to secure new contracts, delays in permit approvals, as well as higher than expected cost of raw materials. We are initiating coverage on this stock with a buy 71 cents target price. I guess this is all the reports we have for today. We'll see you again tomorrow, same time. Thank you.